eMerchants is a specialist prepaid processor, program manager and issuer in Australia, and recently expanded into the UK and then recently expanded into the US. So our core businesses are gift cards, what we would call single-use gift cards, so you can load money to them once and use them once, or reloadable cards, which are just like any other bank card that can be loaded and used frequently. What makes our products attractive is we tend to look for segments in the market where banks aren't able to offer a product or don't want to offer a product. So we look for segments that require a lot of customisation. We look for segments that require a lot of unique branding, and we look for segments where banks typically don't offer solutions. So in terms of our gaming cards, which are used in the gaming segment, they allow customers to access their winnings instantaneously or virtually instantaneously after winning, which is something that the banks hadn't built a presence in. Our three main verticals, if you like, are what we call, on the gift side, they're what you would call incentive cards. So they're not shopping, they're not Myer cards, for example. They tend to be more cards issued for the purchase of a particular product. So Harvey Norman, is one of our customers. Buy a TV in Harvey Norman, spend $1,000 on the TV, get $100, cash back. So they tend to be consumer incentive cards. We do that here. We do that in the UK. We do that in Europe, and with the recently announced US acquisition, we do that as well. In the reloadable side, it's predominantly gaming. So here we have most of the online gaming companies. We expanded into that segment in the UK as well just recently, and that'll also be a big focus of our North American business as well. So our float as of December, we had $130 million in float between the UK business and the Australian business. It's not there's not a lot you can do with it, to be honest, because it's cardholder money. So you can't invest it. We can't do anything creative with it. It effectively sits there. It generates us an interest income, but we're not at liberty to do anything else with it that would be putting that money at risk. So financially, we had a good first half. The business has been on a 3-year trajectory. In 2011, it lost several million dollars, and has been recovering ever since then. So we made $3 and a bit million in EBITDA for the first half of the year. Most analysts would have us at around the 5 to 6 million EBITDA this year, which is 2x on what it was last year. This business it moves at 1 million miles an hour. So operationally, we signed our first gaming deal in the UK, which we signed with a company called Bet365, which is the largest privately owned gaming company in the world. So they've got 22 million customers globally. So we signed that deal recently, which was the product of a year's worth of work. And that product will go into market in the first half of the next fin year. Domestically, we launched programs for William Hill, we launched programs for CrownBet, we launched programs for Bet365. So we now have most if not all of the gaming operators in Australia. The rationale for any acquisition we do, is pretty clear. So the board's mandate to management is it has to be geographically expansive. So we're not going to go and buy a business in an existing market for the sake of growth. So their view is if we already have a presence in that market organically, we should be able to grow that business. So they look for geographical diversification and they look for product synergy. So the business in the US is obviously in the US and Canada, around 50-50 revenue split between those two countries. It gave us that. It gave us, obviously geographic diversification. Product-wise, they have some unique things that we don't do a lot of in the other countries, particularly around mobile payments, which we can then leverage there, but also here and in the UK and Europe. So they were the main drivers for the acquisition, but they're also customer synergy. So when you look at Canada, for example, where we have gaming customers here, we have the same gaming customers in the UK. Those same gaming customers are in Canada, so it just makes sense for us to try to support that client in as many markets as we can. So it was the business was $35 million USD was the price. It was funded through 100% institutional placement. In addition to the 35, we raised an extra 20 million in cash. Originally, we were raising 10 million in cash. We ended up being heavily oversubscribed, so it would have been very minimal allocations for new investors. So we increased the size of the pool. So effectively bought the business, have 20 million in cash. So come the close, which should be end of May, we'll have roughly 28, 29 million in cash, which we'll then use for either additional acquisitions or other growth-oriented investments. I think it'll just in a year from now, I think it'll just continue to grow. I mean, we just come to work every day looking at what the next opportunity is. So, in Australia, the team's looking at what other verticals, what other industry applications are there for it. The US has a huge pipeline of activity, everything from programs with Facebook, which recently launched, to programs they're looking at doing in the casino industry. I mean, they have years worth of runway ahead of them there. UK and Europe is exciting. I mean, the UK and Italy, Germany, France, they're completely different markets culturally, obviously, but they're great markets. There's really good opportunity for us there. So I think it'll just be, a continuation of what we've been doing in the past, with an eye for, the right opportunity for acquisitions if they present themselves.